Welcome to Loop TV. I'm your host, Gene Munster, along with Loop's own Doug Clinton. Our topic today is NFTs, as in non-fungible tokens. This is a form of blockchain. This is not meant to be a primer on NFTs, rather to be a 210 level course. But I guess we got to start with the express part just to make sure everybody's on the same page. What do we need to know about NFTs?
NFTs, I think you can think of them, Gene, as sort of one of one digital representations of something that lives on the blockchain, lives on the Ethereum blockchain primarily, unless they're offered by some centralized company. And they're very popular right now. There's a lot of art. Painting just sold for almost $70 million, a digital painting, I should say, by an artist named Beeple. It's the most valuable NFT in history. You've probably heard of Top Shot. Those are essentially digital trading cards. They're the evolution of the sports cards that we probably collected when we were kids. And there are NFTs of LeBron, dunking in a game that have sold for several $100,000. So this is a huge, huge phenomenon right now for collectors. It's just that they're collecting these digital goods instead of physical goods.
Digital artwork sells for $70 million. What does that tell you?
It could tell you a lot of things. It depends on how you feel about the concept of NFTs. I think if you're an NFT skeptic, it would probably say that we are in a huge bubble. I think if you're an NFT believer, it probably tells you that this is here to stay. And I think the reality is both things could be true. I think the prices and the sort of rapid increase that we've seen in prices for some of these NFTs may be very bubble like. It's happened very quickly. And it's coincided with a sharp increase in the value of crypto, which I don't think is any mistake. But at the same time, I do think that NFTs, sort of as collectibles, we're moving to this digital world where our lives are lived online. It makes a lot of sense that collectibles that we have in the physical world also need to move online as part of these online personas that we all kind of build.
We are good on the express course here, rapidly moving to second semester. Take it away on 210.
Well, I wrote a piece on my blog, contrarianmindset.com, about just NFTs. How do you value collectibles? And it was a fun one to write because I have spent a lot of my life, I wouldn't say my career, but my life in the auction business. My family has an auction company. I worked there since I was a kid. So I've been around the collectibles world for probably the majority of my life. And I've seen what I think sort of makes collectibles collectible, as it were. And I think the same principles that hold true for physical collectibles holds true for digital collectibles. And I'll share with you. It's the first time we've ever done a screen share, I think, on a Loop TV. The simple graphic that I made and shared as part of the write up that I did on NFTs and sort of how you value collectibles, essentially explaining that when you think about the value of a collectible, it's very different than thinking about the value of a stock, or a bond, where you have a calculable intrinsic value based on the future cash flows of the asset. That's sort of the universally, I think, accepted way to try to estimate the value of an asset like that. Collectibles don't have a future stream of cash flows to try to value them on. And so, what you're really left with when you're trying to value a collectible, whether that is a piece of Nakashima furniture, which has always been something that I've always been fond of, or an NFT, you have to consider three things, in my opinion. You have to consider the brand. So, sort of, what is it behind the story, essentially behind the collectible itself? That includes the artist, the creator, the subject, what is it about? And it also includes, I think, influencers who support the brand. The second component that you have to consider is scarcity. And so there's a concept, I think, of absolute scarcity, which is just how many of these things are there in the world. In the case of, let's say, CryptoPunks, which are very popular NFTs, there's 10,000 CryptoPunks, which are essentially these little digital 8-bit works of art. So there's 10,000 of them. That's the absolute scarcity. And then there's a relative scarcity, which is within those 10,000 CryptoPunks, There are only 88 of a certain kind, which are zombies. There are 9 aliens, one of which just sold for almost $8 million. So again, very valuable when you kind of bring that concept of scarcity and combine it with brand, and then ultimately that gives you sort of the availability on the market. And the market is the final piece for me in terms of how you figure out what a collectible is worth. And the market gives you things like similar sales, exact sales. If you're talking about a specific, let's say, crypto punk, we know what individual punks have sold for before. That usually sets a good anchor price, and how you can think about value into the future. So I think it's this combination of brand, market, and scarcity that ultimately determines the value of any collectible. And it's what is determining the value of all these NFTs right now.
A little bit about the world of art over the past couple of years and our investment. Loop is an investor in Masterworks, and they are not currently doing NFTs, but they found a way to basically sell fractional shares in art from artists that even not somebody like I would know. Creates an opportunity to invest in some of these asset classes that have historically been reserved for the wealthiest people. But when I think about those artists, they've got the brand. When I think about some of these iconic brands, it would seem that some of these new players, these new content creators around NFT, do they have the brand to have sustaining power? And why ultimately won't we see things like traditional high class art be available with NFT?
I think you will see some high class art move to NFT. I think you'll see traditional artists over time. Some of them, maybe not all of them, because I think there is still value in physical collectibles. The physical world isn't going away. So I don't think that this necessarily detracts from that. But I do think you'll see traditional artists move to NFT. And to answer your question about the brand, I would say yes with two examples. I mean, we talked about CryptoPunks a little bit earlier. If you do the math and I think roughly calculate what is the total market value of all of the 10,000 CryptoPunks out there, I think you could say it's something around 350 to $400 million, maybe even a little bit more than that right now. So I think that is a brand. It's really the first. I think people think of it as the first NFT, and being first, I think that will always have sort of this powerful brand association. So I don't think they're going away. The other example I would give you is Top Shot, NBA Top Shot. They've got this great licensing partnership with the NBA. The company behind Top Shot actually just announced a $300 million venture round. I think it was today, literally today, that valued the company at $2.6 billion. And so I think that company is here to stay too. And whether they expand in other sports, what that looks like, I think this idea of digital collectibles kind of evolving beyond the trading card, I think is a very real phenomenon.
What happens with traditional collectibles? We talked about some of the art pieces; those aren't going anywhere. But we think about that trading card collection. Are they eventually just going to be replaced by uh, a digital version of it?
Maybe if we think about 50 years from now, but I think existing trading cards, I think that this in some ways is good for them, because I think if you think about, let's say, a Michael Jordan card, there's not, a Michael Jordan current Top Shot that you can buy. And so that plays into this idea of scarcity, plays into brand. Michael Jordan is Michael Jordan. He's the greatest of all time. We can debate that, I guess, but I think most people would agree. And so I think this enhances in some ways the value of older physical collectibles that will never probably be NFTs. Maybe somebody buys a Jordan rookie card and burns it, literally burns it. Somebody did this with a Banksy, and then they put a picture of that as an NFT and say, this is the NFT version of the Michael Jordan card on the blockchain. I wouldn't be surprised if someone does that. But I do think there is still value in those physical collectibles when you can't buy them on the blockchain on NFTs.
Makes a ton of sense. And just big picture, I think it also shows there's a retail component to this. There's individuals know these have been. I think about Tesla, and the success has been more, and the retail investor has done a better job of kind of seeing this coming versus maybe some of the traditional. Come from long history in the sell side analysts. When I think about NFTs, I think kind of the retail audience seems to get this more than the institutional investing audience. Is that accurate? And if so, what does it mean for some of the fluctuations in the asset class?
I think, yeah, probably most of the money that is in NFTs right now is much more retail oriented. I don't think that there's really any meaningful institutional participation right now. I think over time that probably will change. But, to your question around what does this mean kind of to the asset class, that it's a lot of retail, I think it just means it'll be volatile. That's always true. Retail, and this is true of all collectible markets, by the way, because most collectible markets are driven by retail. I learned that in the auction business for sure. But I think that you'll see that things will come in and out of favor. Things will be faddish, and they will take off very quickly, and then they will crash back down to earth. And so it just brings us back to that framework of brand scarcity and market. And I think if you're trying to invest in NFTs, if you're approaching it as an investor, I just think you have to be careful. You should associate yourself with the best brands, try to invest in the blue chip artists in the NFT world today. They could still lose a lot of value, but my guess is over time you will make out okay. If you're approaching this as a collector, intrinsic value, I mean, the only real intrinsic value of any collectible is how you personally feel about it. So if you love a piece of art, it doesn't matter if the brand is going to be good in 10 years. The intrinsic value is your emotional connection to it. And if that's the case, then I can't tell you what it's worth. Only you can decide what something like that is worth.
Thought here as you talked about the auctioneer business. I'd love to go in reverse and talk late 90s, what you learned from there. I'm going to hold off on that. Essentially what we are having is some sort of an auction type of a marketplace. In some ways, that's what equity markets are. Things are kind of auctioned off every minute of the
Mhm.
day on these stocks. Is that the right way to think about this?
I think it is. I mean, an auction, if you think about the auctions I grew up in, you bring buyers to a centralized location. The auctioneer represents the seller and sells goods to the highest and best bidder in real time. And I think you're right. I mean, that is very similar to what a securities market is. You have your exchanges sort of in the middle, and you're finding what is the market price at any given time. The seller may not be happy with the price sometimes, the buyer might not be at other times, but it's the most efficient, I think, price discovery process that we can do.
As occasionally, usually it's an annual holiday party. He will enchant Loop with a his auctioneer skills. I'm not going to put you on the spot and have you do that today, but I just want all of our viewers and listeners to know that Doug is fully capable of speaking at that cadence. Thanks for bringing auctioneers' insights to NFTs, enlightening me. On behalf of Doug, myself, and Loop TV, bye for now.